Hi, Steve Walker here again at Promise Money, and today is the 27th of July 2023 and I'm talking about fixed rates again. Now, I did a video at the beginning of this week which was about fixed rates and swap rates, telling you what swap rates are and how they impact on the long-term market and the cost of fixed rates. If you haven't watched that video, probably go and watch it now, then watch this one. But I've got a bit of an update for you. I've been watching what swap rates are doing and they're still holding steady. So they are holding at about 8% less than they were at the beginning of July, which is good. So that would suggest that fixed rates will come down, and they already have started. As I predicted, we're seeing lenders now issuing lower rates, which is great news, lower fixed rates. To the extent that deals that wouldn't fit on affordability only 5 days ago are now fitting because the rates come down. That makes the affordability better because the repayments are lower. And that's really, really important, especially on 5-year fixed rates. Maybe I'll take a moment to explain why I say that. What lenders are forced to do by the regulator is make a number of assumptions. What's the rate that you're getting your deal at now? And what will the rate potentially go up to, i.e. build in a stress test, and they have to work out affordability on that basis. So if you were getting a rate of 5%, the lender might have to assume that it's 7% or even 8% when working out the affordability. If it's a 5-year fixed deal, then they only have to assume this for 5 years. So if they fix your rate for 5 years, or you fix your rate for 5 years, then whatever the rate is that you're being offered on that 5-year deal, that's what they use to work out your affordability. So if you've got a 5% variable deal and a 5.5% 5-year fixed, the variable would be worked out at maybe 7.5 or 8% in terms of the affordability, whereas the fixed one will be worked out at 5.5%. That gets you a massive amount of more cash in your pocket. So that's why 5-year fixed are important, especially for applicants where they are trying to raise the maximum amount on their affordability. Anyway, I digress slightly. But what have we just seen today, or in the last day or so? We have seen the US federal bank raise their rates. So they've raised their rates to circa 5.2 to 5.5% at a time when they're at 3% inflation. So there is a potential that when we get to the August rate review, that decision could impact on what we do in the UK, because there'll be a logic behind that. And if that logic follows over here in the UK, or we just copy them, it could mean that base rates go up a little bit further. Now, if base rates go up, that affects you straight away if you're on a variable rate, but it could affect the fixed rates that are being offered at that time. So what does that mean? Probably now is a bad time to lock in the current rate just in case, get onto the current deal, or maybe leave it a week or so, because some lenders are still coming down, but they'll be watching this as well. They're a lot brighter than I am, so they'll be watching this as well, and they might be thinking, oh, I don't know. But I think that the chances are they're looking at swap rates. They're going the right direction. So think about, maybe if you're going to get a remortgage or a mortgage now, get an offer in principle on the table, so you've got that rate locked in. Then if it goes up, then it doesn't affect you, as long as you can get your mortgage completed before it's withdrawn. So yes, we might see a slight increase in the base rate in August as a result of that, but we might not. But I'll come back to swap rates. Swap rates are still where they were. They've not been affected. They're still 8% less than they were at the beginning of July. So at the moment, the prognosis is still looking pretty good for 5-year fixed and longer and fixed rates coming down. So let's hope they still do. But there's just a little bit of I've got a little bit of a warning there that if this gets analysed in more detail, we could see another base rate increase. So yeah, if rates continue to come down over the next week or so, that might be the time just to get an application in, or get it in now, so that you're able to get the best rate at that time, because they could go up. So lock in your 5-year fixed if that's what you're looking for, or your 2-year fixed. Anyway, there is no crystal ball. It's just just a thought process, really, looking at what's going on in the market. So good luck, and I'll tell you more when I know more. Thanks, bye-bye.